Hello, everyone. My name's Alan Pozzi, and this is Knowing Real Estate with the Pozzi Group, and my co-host is Art Meister. Art, how you doing today?
I'm doing great, Alan. How about you?
You know what? It's another great day in real estate, and I think, one of the things is there's a lot of things out there, a lot of confusion in real estate, but, one thing I can assure you is if you're a prepared agent, if you're a well-trained agent, and you're a confident agent, I don't think we're going to experience a lot of upheaval or a lot of problems in this business over the next couple of months and years. How do you feel about that, Art?
Well, I think we're going to have our share of challenges.
Absolutely.
I think the waters are unclear.
Yep.
And we're going to try and help you sort this out today. And we're going to talk about some of those challenges that we face and how to get a handle on it now.
Absolutely. We're going to, we might not have all the answers. And as we talk about things today, we're probably going to have future sessions because there's probably going to be updates as the lawsuit progresses and as settlements become clearer and as the industry starts taking shape towards July and August of 2024. But, going back historically, the real estate industry has always had a lot of quote-unquote challenges in our business. Art, I know one of them, and I know you're aware of this, the pandemic, we didn't have any plans for that, but why don't you kind of visit some of the challenges we've had as an industry over the last, 30, 40, 50 years?
Well, probably some of our audience, or many of you in our audience, were not around in the 70s when we had interest rates that soared to nearly 20%.
Absolutely.
I probably got to come clean with this. I bought my first home in the 70s at 18% and thought I got a great deal.
Yeah, I got one at 14%, and I thought, wow, that's an unbelievably low interest rate.
I tried to refinance, I think, at 14% from the 18%. So,
yep.
There were challenges then, but it was acceptable. That was a situation that we dealt with, and as someone who wanted to get started in real estate and own a home, the American dream, you dealt with it and you bought what you could afford.
That's exactly right. People still bought homes when interest rates were 16, 17, 18, even 20%. They still bought homes. There was still a demand for real estate professionals to represent them on a regular basis, both buyers and sellers. So, interest rates really, were they a challenge? Absolutely, they were. No denying that. Could we buy as much house at an 18% interest rate? No, but we still bought homes.
We did, and we got started, and everybody looks at us at this stage in the game and they say, well, yeah, but homes were so much cheaper then. Well, you know what? So were wages.
Yeah. Our income wasn't quite what it was.
Our income was not near where it is today either.
Absolutely.
When you're, I think the minimum wage was probably $2.30 an hour at that time.
Might not even been that much.
Yeah, it could have been $3.
You're a California guy here. He got paid more than us.
I mean, at that time, I was out there, and it's crazy to think back on those times.
Yep.
But when you look at the rise in real estate prices, you've got to also parallel that with the rise in wages.
Absolutely. Rise in wages and, interest rates, it's all relative. Mm-hmm. I remember talking to my parents. They bought a vacation home back in like the early 1960s, and they could barely afford a $25 a month vacation. They had a house payment. $25 a month. Which right now I put $25 of gas in my car every other day, and
well, yeah, and then lo and behold, you had a maintenance issue with your home.
Yeah.
And now what are you going to do?
Exactly.
You've got to try and save some money along the way, and you're probably looking to start a family. And the challenges were every bit the same then as they are today.
Absolutely, and I think it's one of the things we always got to keep. It's all relative, So interest rates, again, they were an obstacle, but they didn't prevent us from doing business. What about 2008 when there was a financial collapse? Boy, you would have thought the real estate industry would be on its heels, wouldn't you?
Well,
but did we still sell homes?
We did. In fact, you sold some of mine.
Absolutely, when you were an investor. Yep.
Yes, as an investor. Alan was helping me find opportunities here in San Antonio, and we were taking advantage of those and flipping the homes, and Alan would list them and sell them on the other side.
Absolutely.
So we went through that. We went through and what did we find in 2008? We found an entirely new market of short sales.
That's exactly right.
And the opportunity. So in every one of these situations, every one of the challenges in business or real estate, historically, there have been opportunities. And there are opportunities now with the current challenges we face and we're here to help you get through those.
Absolutely. One of the things you always got to keep in mind and stay focused on is no matter if it's a good economy or a bad economy, you've got to uncover the opportunities. And I think that's a good point that you made, Art, is even though when we had the financial collapse of 2008, my business, as you weren't licensed yet, but you were still investing in real estate. But one of the things myself and some of my teammates did is we got into the foreclosure business because there was a lot of foreclosures, but it created opportunity for us. So you got to find opportunity. Again, going back, hitting the pandemic, we had no plan for the pandemic. We woke up one day and they said we're shutting down the economy. But Art, did you still sell homes in 2020?
Well, as many as I could. I think we shifted quickly to move into a different market. Those of us that got creative and we were able to FaceTime. We still had cell phones. We were showing homes through FaceTime, Google programs, whatever we had, Zoom.
Yep.
We were filling out paperwork that we'd never filled out before. We hadn't even met some of our buyers face to face. We had met them on a Zoom meeting or on a FaceTime call.
Yep.
And we were getting down on our hands and knees examining the intricate parts of a home we were showing.
And here's the interesting thing about 2020 during the pandemic, it created a whole new market because we had people that lived in apartments that now were working remote that couldn't live in an apartment because they needed more room, so they had to buy a home, and interest rates were pretty low. And they were well qualified, but they always liked living in an apartment. But you know what? These people that normally lived in an apartment, maybe they were married or cohabitating or whatever, and they figured out now we're both working out of our house. We both can't live in this little 800 square foot apartment and work together, so we need to buy a 1,500 or 2,000 square foot home. So my partner can have a room across the house. I can have another room to work my business. We don't conflict with one another. So it created, my point is this, the pandemic created a lot of opportunities for agents like us that were able to pivot and shift.
That's correct. And, one other factor with that, of course, Alan, was the fact that people were moving to Texas.
Absolutely.
They could work anywhere. And we all were working out of our homes. And one of the promises I know that you and I made was we're not going to let this shift in the market get our business.
Absolutely.
We worked way too hard to build our business. We're going to double down on what we're doing, and we're just going to keep rolling. So those agents, back then, you remember, a lot of agents said, I'm going to take 3 or 4 weeks off, and I'm going to see what happens and see what shakes out. And I'm telling you, they never got their business back.
Exactly right. It was an amazing stat back then in that agents that had never been top producers before all of a sudden were top producers. Top producers that were comfortable with always being top producers were no longer top producers because they didn't have the ability to pivot and shift. But if we go back and look at things like 2008, high interest rate of the 70s, the pandemic, even events like the Great Depression and things like that, we couldn't plan for any of those things because we were blindsided by them all. But you know what? The big difference between this NAR lawsuit and all the other settlements that are involved with all the various brokerages and things like that is we now have the ability to plan. So the key ingredient to our success between now and in the future is planning. How do you feel about that, Art?
I think you're absolutely right. You take the technology that we have today and how much it's grown since 2008, since the pandemic. We've got tools that help us all the time, and we've got leadership, and I hope in your company you've got the leadership that can guide you through this particular storm, because
Absolutely.
That's going to be the key. Understanding what the lawsuit is about, how do you deliver the message, and what kind of tools can you offer your agents?
Yep.
And I think, for the two of us, we're quite fortunate there. The leadership we have is great. So we really think we're fortunate, but we've got to do our part as independent contractors and real estate agents. We've got to execute whatever plan we develop.
Yep.
So pick a strategy, develop it, and then execute it.
I think that's the key ingredient, no matter in any strategy you employ, is execution. And without execution, the strategy's only worth the paper it's written on or not written on.
And how many times in our career, Alan, have we looked and we've developed a good strategy and then we failed to execute some of it or part of it, and the strategy didn't work, and It really was our fault.
I know I've been guilty of it. You've probably been guilty of it. But you know what? one of the big differences between being guilty of non-execution and execution is eventually when you do execute, you find out that your plan A is either working and you stay with the plan, or your plan's not working and you readjust and adapt another plan.
Exactly.
And I think that's the key ingredient, and it kind of leads me to the next issue of, so where are we now as an industry? Where are we now? Well, that's anybody's guess. Now, I know as of May 3rd, we were legal counsel from the NAR sent out a letter kind of communicating their ideas on the settlement and where we're at. Our brokerages, whether you're most of the big franchise companies, have had settlements or have done separate settlements with the in the class action lawsuit. So we have some compliance that we need to follow depending on who your broker is. But one thing I do know is, and I guess the question I have to ask, Art, is how is the consumer going to react? How, especially buyers, because they're not going to stop buying homes because there's this lawsuit settlement. People
Right.
are still going to buy homes in 2024. People are still going to buy and sell homes in 2025, 26, 27, and probably for the long-term future. So I think one of the things we need to do is kind of figure out how will the consumers react. Okay, because we know they're going to still buy homes. So I think we talked a couple of weeks ago about maybe 4 choices a buyer may have with respect to, hey, I'm going to buy a home. I'm pre-qualified for or pre-approved for a mortgage, or I've got the cash to buy a home. We talked about some of the 4 choices. Why don't you visit with us on some of those 4 choices that a buyer may have in today's real estate market?
Sure. They can always represent themselves.
Absolutely.
We think there are a lot of challenges with that, and eventually that will come to fruition, and they'll realize that they can't do it by themselves. Yep. I think what that may mean as a listing agent, if you've got a listing, excuse me, if you've got a listing that you're working and you have an unrepresented buyer, you've got a situation where your seller may want to save on the commission and tell you that we're not gonna pay the buyer's commission if in fact they're unrepresented, unrepresented, and I think that's fair.
Yep.
They could certainly say that. So what plan do you have to answer that would be the question. How are you going to deal with it? And I think we could be going back to the pandemic days where many of us were working both sides of the transaction, even though the buyer was represented or the listing agent or the seller was represented.
Yep.
We ended up working both sides of the transaction because the other agent had got into the business and they were new and they didn't know what was going on.
Well, we may see more intermediary transactions, but one of the things you got to ask a buyer that wants to represent themselves. The buyer says, look, I can't afford to pay you a commission. I can't afford to pay you your fee. So I'm just going to represent myself in this transaction. Well, the question I ask myself if I was that buyer, and I would ask your buyers this, I know that, for example, if I ever got arrested, I'm not going to represent myself in a court of law. I'm going to go out and hire the best attorney I can afford because I want the best representation possible. If I get audited by the IRS, I'm not going to try and deal with the IRS myself because I don't know the tax laws and I don't know the consequences of bad decisions with respect to tax law. I'm going to go out and get the best CPA I can to represent me on that. If I get diagnosed with a bad disease, some type of heart disease, or maybe it's cancer or something like that, I'm going to go out and get the best doctor I can find to help treat my disease. And I think the same thing applies in real estate with respect to buyers. They need to find representation, and they can try to do it themselves, but the nuances of the contract, all these things are real important. So the buyer then has 3 other choices. They can deal with the listing agent, can't they? They
can. One thing I'd like to add to that, Alan, is keep in mind that almost every case, the buyer is making the biggest investment of their life.
Absolutely.
And why you would want to take and think that you know everything about the real estate business as many of us should admit, we didn't know about the real estate business when we first got in it. And now that we have some experience.
And we're always learning.
And we're always learning. And part of that continuing education that we're required to have helps us. It also helps keep our E&O insurance down.
Absolutely.
So all those things benefit the buyers and the sellers. And for somebody to make a decision like that and then not understand the process, they have no idea how much money they have at risk.
Absolutely.
And how many things can go wrong during a transaction that agents spend their time working out.
And they don't understand termination. They don't understand their ability to get back their earnest money. They don't understand any of that because they don't understand the contract. And again, that kind of why you hire a professional. But again, if you're using the seller's agent to represent you, the seller's agent, if you're an unrepresented buyer, the seller agent still has a fiduciary duty to the seller.
That's correct.
They just owe you the duty of honesty, fairness, and full disclosure. That's it. And so I don't know if choosing the seller's agent is always the right choice in that case.
Well, that kind of brings us to your next option, which would be why don't the buyers hire an attorney?
Art, why don't you tell us you met with an attorney today?
What
do they charge per hour? The attorney that you talked to today.
We had talked a couple of weeks ago on one of our podcasts. We were throwing around a number of $275 an hour. I missed it by $75 because he told me
expensive, aren't they?
It was $350 an hour, and if you want to talk about the gardener, the landscaping out front, the meter's running. That was a quote from him.
Exactly. So bottom line, it's all about billable hours, isn't it?
It's billable hours, and we hit on that in the prior podcast, and that is not going to change. And I've got to believe that they now have a very, very solid market representing buyers. And many of these attorneys also have title companies.
Yep.
They're the attorneys for title companies. So they've got it worked out, but the meter runs when they pick up the phone.
Exactly.
That means the meter's running when they get up out of their chair to go meet you to let you in a house. That means that the meter's running when you call them and say, hey, how come I didn't know about this, that, or the other thing? He says, and what about this? Don't most attorneys ask you for a retainer?
Yep.
And what is the purpose of a retainer? The purpose of the retainer is that they have their cash up front when you start talking about the garden.
Well, and also, you think an attorney might charge you some expenses? Like if they have to drive out to a property that's 20 miles from their office, you think they might charge you mileage?
I would.
Yep, I think you would too. I think that's absolutely correct. So when you're talking about having an attorney representing you, you're probably going to pay some type of retainer. You're going to pay billable hours, which mount up real quick. I mean, think about all the things we do for our clients. Like if a title company sends me an email or calls me about something and I reply to them, that's a non-billable hour for me as a real estate professional. But if I'm an attorney, that's a billable hour.
Yes.
And so these little things that we do as real estate professionals really are cost savings to our buyers in this particular example, or our sellers too. But we're saving money for people, aren't we?
Yes. And do you think when that attorney replies to an email that they actually look down at their watch and say that took me a minute and 30 seconds and bills you for that?
Well, they bill you for something.
they bill you for something, but I'll bet it's not a minute and 30 seconds.
No, a lot of attorneys have little time clocks too. They hit that little time button, and if they're on the phone with you for 15 minutes, you're probably billed for 15 minutes, or thereabouts.
And they have predetermined rates.
Yep,
so
absolutely.
They may have a $40 charge for replying to an email.
Yep.
They may have a $100 charge for replying to an email.
Yep, absolutely. And that's just a one-sentence reply.
Mm-hmm.
If it's a complicated reply that takes them 30 minutes to formulate, that's an hour reply. So again, it's all about billable hours, retainer fees, and things like that. So I think right now we can discount hiring an attorney. We can probably discount the buyer using the seller's agent, and we can probably discount, just because of a lack of knowledge and not being aware of what's going on in the sales contract, the buyer representing themselves. So what's the fourth choice, Art? Who do they hire?
Who would they hire? They would hire us.
I think they'd hire you or me, right?
They would hire us.
That's right. So I think we're the best solution in that. And I think if you explain your value proposition, we've heard these terms, value proposition, and they all have different meanings depending on your perspective on things. But if you can determine your value and explain to prospective buyers those 4 choices, the decision to choose you is pretty darn clear.
I think so.
And it's a no-brainer almost.
I think so, but you've got to be able to convey your value, as you said.
Absolutely.
If you're unable to tell your buyer what value you bring to the table, then they've got no choice but to seek one of the other alternatives or seek another agent.
That's exactly right. And most buyers are going to tell you, especially first-time home buyers, they don't have the wherewithal, they don't have the cash, they don't have the ability to pay your fee, to pay your commission. And we understand that because they're usually operating on a thin line. But here's the thing is, one of the things I've always emphasized in establishing your value is you establish value by providing solutions. So what's your solution to maybe a buyer, first-time home buyer? They have the 3.5% they need to put down on an FHA loan, but they don't have any money for closing costs. Well, what do? Maybe we refer them to a loan originator that can set them up with down payment assistance or something like that, right?
That's correct. You go right after the down payment assistance. Maybe we have to work with the listing agent in a negotiation. This is a negotiation.
Absolutely.
So maybe we've got to get some concessions from the seller to help them out.
Yep.
But there's a way to put that transaction together, and it's our responsibility as their representative to find a solution, as
That's
you said,
right.
Alan.
When we're finding solutions, we're creating value for the client, for the buyer or the seller, but in this case, the buyer. When we're providing them with solutions, and when you provide solutions, there's a sense of loyalty. People know you have all the answers, but you're finding ways to make things work. You're also finding ways to get yourself paid.
That's correct. And we all want to get paid, but until we get the transaction completed, there's no money for anybody.
Absolutely. And I think one of the things is we're going to come to the realization, maybe sooner than later, hopefully sooner than later, is sellers are going to realize, hey, they're going to maybe have to pay some buyer's agents part of their fee because buyers aren't going to be able to afford to buy the home unless they need to be represented. So, I think things are going to kind of shake out over the next few months, and sellers are going to figure out that, you know what, it's maybe worth my while when I list my home for sale, and we know all the rules about the MLS and all that kind of stuff. I'm not going to revisit that, but maybe it's worth my while to have my listing agent advertise the fact to potential buyers and buyer's agents that we're going to help that buyer with the fee so they don't have to worry about the fee. They can make my homes more affordable to them, and I can sell my home quicker.
Right.
And I think so. Not only do we have to provide solutions to buyers, as listing agents, we need to provide solutions to our sellers and give them some valid choices.
That's it. And again, it comes right back to our ability to present value to the sellers.
Absolutely.
And deliver the message that shows them what that 3 or 2.5% or whatever that fee is.
Yep.
It's our responsibility to relay to them and have them understand that value and the exposure that they tend to get.
Absolutely. So I think kind of in wrapping things up today is I think we had a good session today and kind of giving you an update again. Do we have all the answers with respect to the lawsuit? No, because we don't know all the answers yet. Nobody does. And if anybody tells you they do know all the answers, they're probably wrong. So you got to listen to the pros. Seek guidance from your broker. Seek guidance from the franchises you belong to. And if you notice one thing that everybody's telling you, and the brokers that are responsible, they're also telling you they don't have all the answers yet. But as they get answers, they're going to share them with us. And that's what we're going to do with y'all out there. We're going to share our answers. When we get answers, we're going to share the answers. But the most important thing is we're going to help devise a strategy so that you can represent both buyers and sellers in the new real estate industry of 2024 and beyond and still get paid.
Well, the waters are unclear.
Absolutely.
That's one thing we know.
Right now. Yep.
We know that the waters are unclear. And I would say to you that if you've got the leadership that you think you need, then you need to rely on that and continue moving forward.
Absolutely.
If you don't have that leadership, or if the leadership looks weak, there is always a like button, a subscribe button, and our contact information
That's
is
right.
below, and perhaps we should have a discussion with you.
Absolutely. Art and I would love to talk with you one-on-one. We'd love to visit with you on other solutions that we may have for you and your career. So, again, like Art said, like and subscribe.
All right. I'm going to take us out then.
All right, Artie, take us out, man.
We're gonna ask you to like and subscribe. Tune into our channel for another podcast. You'll be notified right away. And again, our contact information is below. We'd love to talk to you. And remember, who you work with matters.
Absolutely. Thanks, everyone. See you soon.